I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer, and a member of FINRA. All my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Actually added a little bit of a Facebook position today, and it is a little one. It is pretty small, but it is a new position. Oh wow, what a day, what a day, what a day. Where to start? So first of all, it was all about Snap, right? And I feel bad because I know some of you guys were swinging pins into today, and pins look so good. It just looks so good. It's looked great ever since this earnings report, right? Had this earnings report back here at the end of May. Traded well on it. We know the market was a disaster into mid-May, so it had to pull back along with the market. Okay, fine. Created equal lows, traded its way higher. And then when the market pulled back here to those lows again, this thing just held up like an absolute champion. Pins here is just looking so good. Holding up great. You know, maybe ready to go after this $24. Try to give another leg up. Your next resistance is at 28. It's looking like 28. Move to 28 is very reasonable for pins. And then, you know, this is the danger with swing trading, right? Everybody always wants to be a swing trader when they see people around them making money, and then all of a sudden you see the other side of it. You know, I always have that rule with trading where on swing positions you want to have a profit cushion. I call it the 1% rule. It really should be the 1% guideline, because sometimes 1% is not enough. But basically the rule is, in order to keep a position overnight, you want to be in a win-win situation, right? You want to try to negate, what you're trying to do when you keep a position overnight is to be able to be there for daily chart reward if the stock continues in your favor, but not really be exposed to a ton of downside risk should the whole market gap down the next day, or there's some bad news that comes out in your stock or something like that. So that's why I have this rule, again, it's a guideline, that I call the 1% rule. And basically what that rule states is that you should only keep a position overnight if you are currently at least 1% in the money on that position. That way, if the whole market gaps down 1% tomorrow, as an example, and your stock gaps down the same as the market, it's not going to be the end of the world, because you're just kind of giving back the money that you've already made, but you're giving yourself the room, you're giving yourself the potential to potentially make a lot more. So if you're going to swing trade, you want to be able to do it from a position of strength, a position where it's going to be hopefully a win-win for you. And then again, it's a 1% guideline, because sometimes 1% might be enough. You know, if you're in a excuse me, still getting over this cold. Probably in the throes of it actually right now. I keep doing these COVID tests. I've done a few now, and they're all negative, so it's just a nasty cold. But anyway, sometimes the 1% guideline is not enough if your stock is very volatile. Maybe you want to be a little bit more conservative about it. Maybe you want to be 2 or 3% in the money if you're worried about the volatility of your stock to have that cushion. But even with a 2 or 3% cushion, there's nothing you can do if really bad news comes out that no one was expecting, right, overnight. You're making, this rule does not apply to holding into an earnings report, right, where you know that there's going to be events. You know that the stock could easily gap down 10% tomorrow because it's going to be reporting earnings, and you're 1% in the money going into the earnings report. That's definitely not going to be enough. But provided that there's no major news that's scheduled, and it's just a regular day, and you're in a win-win situation, it makes a lot of sense to keep that position overnight. But there is always a risk that random news hits the market and you get a really big gap down. And I know that's just what happened here. A handful of you guys at least were swinging pins because of how fantastic it looked. I think a couple of you guys were swinging Facebook just because of the pricing and how it's worked its way up since that last earnings report. And I don't know what to tell you. You just got totally screwed. I'm sorry. I've been there. I know it doesn't help, but I've been there. I also have another rule, and this would not have helped you today, called a 15-minute rule. Actually would have compounded your losses today. But when I'm keeping a position overnight and it gaps past my out, I always wait for the 15-minute low to put my stop in. They're printing ARC up right now. Is that what you're saying? It's like 20 cents. I won't get too excited about it. So anyway, you know, you might have given this that first 15 minutes and doubled down off the 15-minute low, but then you would have gotten stopped out of that as well. There was just too much selling. It's incredible to me, and we discussed why this could happen in the morning meeting, but it's incredible to me that Snap, first of all, that Snap even made that announcement. Second of all, that they're down 43% off of it. 43% off of it. And third of all, they wrecked the entire market. The entire market got smoked because of Snapchat. Like Google. You got Google, you know, down 5% on a closing basis today. It was down, you know, a good bit more than that at Lowe's. You know, after the snapback, it's still down 5%. They just trucked this entire market off Snap. And it doesn't not make sense in, I know that's a double negative, it doesn't not make sense in an environment where everyone's as fearful of a recession as it is, because people are trying to read in between the lines of recession. They're trying to read in between the lines of ad sales. And ad sales are, you know, a very significant industry in the United States. Between your traditional media, you know, obviously your social media, and then even like Amazon and Google. You know, Amazon has had a significant increase in advertising earnings that have hit the account over time. I mean, have hit the company over time in a positive way. So this thing just wrecked the entire market. The question coming into today was into this gap down, because we were set to gap down pretty nicely this morning off of it. Is it overblown or not? Is the market going to say, all right, it's just Snapchat, but Amazon's down 40% off of its highs, Google's down 30% off of its highs, they're gapping these things down, it's a buying opportunity to be able to come and get them? Or is it just going to lead to more of like what we saw with Target and Walmart last week, where Target and Walmart seemed to add a whole, you know, additional systemic risk to the market, right? Like these things took the market down further also last week. We saw what that XLP ETF did. They kind of wrecked everything down off on that. And just with the way the environment is right now, they just sold everything off even significantly further. A couple things that are notable about today. First of all, I really wish the volume was higher today. The selling in the beginning of the day today was different, I think, than any other day, and we've had a lot of down days this year. Different than any other day we've had so far this year, with the exception of maybe May 5th, the day after the Fed, when we ripped higher and then came all the way back down. The selling in the beginning of the day here was, you know, we gapped down, and the selling was extremely violent all the way down to yesterday's low, or the previous day's low. We tried to stabilize a little bit and then went even further down. This was the most violent selling initially that I think I've seen since then. And you almost don't see it in the SPYs. The SPYs were showing some relative strength because your XLE and your XLP were holding up better. Initially, actually, Apple held up okay for about 10 minutes. Microsoft held up okay for, you know, even a little bit longer than that. But you can see it in the Qs for sure. Look at this Q chart in the beginning of the day. You can see it in the IWM. You can see it in a lot of the growth stocks. I remember seeing it in this WeWork that I've been trading very consistently for a while. I remember just looking at the tape, and I had like an exclamation come out, I think, into the VTF, like an oh my god type of thing. Like what was that? The selling today seemed to be different. It seemed like somebody was just totally screwed on this snap and was having to liquidate things as fast as possible. like I was just looking at, again, WeWork was one because I traded so consistently, was one that I had up on my screen right away, and I'm just seeing just market sells get blasted in. And that selling is very different, that like hectic market sell orders coming in. It's very different than even what we saw on like this day. And look, this was an extremely weak day back here on May 18th here. This is, I said it at the close that day, I felt like this was one of the weakest trading sessions I've ever seen in my career. But the selling was just very consistent that day. You can see it in your 5-minute chart. It was very orderly, it was very consistent. It started pre-market and literally lasted all day. That selling, it's like, there's no real buyers, the market tries to run up, it runs into a lot of heaviness, it works its way back down. Like, that's kind of the feel of the tape, if you will, on this type of trading session. That was not the feel of the tape this morning. The feel of the tape this morning was get me the F out. And just market selling, and a lot of things that I was looking at were coming in very heavy, very fast. And you look at the Q chart, this is one of the things I remarked. I don't know, I can't remember the last time. So usually the smallest time frame I ever look at is a 5-minute chart. I have access to a 2-minute chart that I can reference if I need to. I almost never look at it. I don't even have access to a 1-minute chart. I don't even have it built into my software. I just think it's kind of a useless time frame. On my 2-minute chart, the market, NASDAQ was riding down, so was the IWM. Rode down the 80 MA on the 2-minute chart to almost 1030 before we finally got that first bounce. That actually happened to be the low of the day in the NASDAQ. This is not orderly selling in the same way as what we saw on that previous Wednesday. So, and it was on decently heavy volume initially. It's just a shame that the daily candle itself is not on heavier volume. And it was also a shame to me that, like, there was no real bottoming out capitulatory action. So I guess the point that I'm trying to get across today is that the selling seemed different. It seemed like somebody who is maybe, a growth tech fund or something like that was blowing up as a result of Snap, just market selling everything that they could get their hands on in all these other stocks, and that was leading to that insane 2-minute trend that went for an hour on a 2-minute chart. I just wish it culminated in something. I want, like, it seemed like the panic was there, but that real capitulation where the market has that massive volume on lows as we're super extended, and then these couple of candles here are just huge ranging candles, and the volume here just escalates to, you want to see a 5-minute candle here at lows that's bigger than the usual opening and closing bars, right? We always have the first bar of the day and the last bar of the day have higher volume than any of the other candles because they satisfy the market on open and market on close orders. That's why that happens. And I've got no reference point here anytime recently because it happens so rarely. But I've seen it in like real capitulatory trading when the bottom comes in. That low on that bottom, that volume, is like even significantly better than the opening and closing candles. And we didn't get that. We're still not seeing that. So it's a really interesting day. It's an interesting daily candle too. Because, your SPY daily candle actually looks pretty decent. You do wish it was on higher volume. It's just another tail down here, potential lower high. We're almost right back into the 80 MA on the daily. If you look at the SPY daily candle here, especially if you could chop off part of the tail, you wouldn't even think anything happened. The Q and the IWM daily candle is really not as good. This looks like it may be a new yearly low. Low for the year here on the NASDAQ, new 52-week low on a closing basis. But this candle here doesn't give me the same kind of conviction. And the IWM, which has been the most important index to me, it still gave me that close above 175. If you guys remember, when we were initially trading down here, I was like, okay, let's take a look at 175. I think 175 is an important previous level. Let's pay attention to it. And we actually tried to hold there for 5 minutes. It was the only green 5-minute bar in the first hour of the day when we were riding this 2-minute down. And then, you know, we evaporated below that. So the IWM still did close above 175. This is still not the end of the world as a chart for me. But the Qs don't look great. The SPYs are okay. I wish the volume was bigger. It's still hard to have conviction. I had more conviction at yesterday's close than I have at today's close, to be honest with you, from a bullish perspective. I felt kind of excited yesterday at the close. We spent that entire day, I don't need to recap it for the 100th time because I said it in yesterday's afternoon meeting and I said it this morning, but real briefly. We spent the entire day kind of sitting into the ADMA. We closed at highs. Things were looking decent. Then Zoom reported earnings. Zoom's trading up on earnings. I'm like, oh, that's really solid. You know, that's going to be good here for the market. And then the snap came out and just totally ruined everything. I mean, my mind was just blown this morning. Honestly, it was blown last night. That snap could have that big of an effect on the entire stock market. Snapchat, of all companies. I signed into my Snapchat account for the first time in like probably 2 years last night, just because I wanted to be like, just look. It's like you guys need my help. let me. You guys can add me on as a monthly active user because I logged in once for this month. You guys need the help. Anyway, that's kind of where we're at the end of the day here today. Kind of laid out the two scenarios on what I thought might happen. I actually thought we might get bid up, but we laid out the other scenario, the potential systemic risk, similar to what we saw, you know, with Target and Walmart, and that kind of spreading across the board. And in some ways, it actually seemed like it was a little bit of both, right? You had that, like selling coming in as if the market's going, okay, this is really bad because we could, you know, another brick in the wall towards a recession in the beginning of the day. By the end of the day, they bought us up pretty decently into the close. We still closed down 0.75% in the Nasdaq. Sorry, in the S&P, 2% in the Nasdaq, and 1.5% in the IWM. So it's still kind of a bloodbath, but it was a bloodbath where we ended up closing significantly off lows. So it's a bullish signal. I'm still somewhat happy with the IWM chart. I'm somewhat happy with the SPY chart. It's just really hard to have conviction until we see some actual confirmation that the market can break up on some prices, because it almost seems like we have a daily disaster. And every time this market's starting to look a little bit better, we get our next daily disaster, and it brings us all the way back down. I don't think I had anything else to talk about. I'm just going to end it on that note. So I'm going to answer questions. Scrolling up here into the VTF. How's our Nordstrom doing? Is Nordstrom saving the market? Oh, it's all the way back down. Only up 3% now. Come on, Nordstrom. Agilent reported also. How's Agilent doing? Nothing going on. All right, first question I'm seeing here is from DJ. If you see a high volume doji or hammer into extension on a 5-15 minute chart, are you always trying to enter on that specific candle for this kind of setup? Or are there confirmation candles to follow that might increase your probability of success? Sure, so technically you want to enter once the hammer closes. If you're looking like a hammer extension trade for just a retracement back up, you technically want to enter when it closes. I'll sometimes cheat on that a little bit. If I have conviction that it's going to close that way, I'll take the buy a little bit early, which, by the way, hopefully that didn't hurt anybody today, because I was trying to call out a couple cheats on the way down with this market where I thought maybe we could be building out a hammer, like off of this one as an example, and I think there was one other. But then they didn't actually close that way, so that's the problem with cheating. But technically you want to wait for the candle to close. You want to see it close as a hammer. I've got no examples for you on this chart because it just went straight down. And then you're just looking for a retracement back to the ADMA. I'm not looking for any other type of confirmation candle, because a confirmation candle would be that the market's already going up. If anything, time is against you in this type of trade. So what you're looking for when that type of candle comes back in that's a signal that the market needs to give a correction, right? The market got extended to the downside, now it needs to correct. There's two ways in which a stock or a market can correct. Through price, where it snaps back up, or through time, where it goes sideways. A hammer is a signal of a price correction, so that's what you're looking for. Sometimes it turns into a time correction. That's certainly not going to be good because it's starting to deteriorate your reward potential. If the stock starts going sideways, that 80 EMA is coming down, that 80 EMA is your first target, the 21 EMA is your second target. Basically, you're just looking for a snapback to equilibrium. But if equilibrium is working its way down, that's bad. So you want to execute that faster rather than sooner. I don't hate if there's one single inside bar after the hammer, because you could trade the inside bar in either direction. If the inside bar breaks to the upside, then you have an inside and up. It's kind of confirming the hammer. If it breaks to the downside, that's actually a really bad signal. It means that the market's probably going to, it couldn't even bounce at all off that hammer. It's probably continuing lower. Then all those stops are going to trigger, and then it's going to go significantly lower. So if you get the inside candle, I probably want to already be in it. But I could use that inside candle if it breaks to the upside to add to that stock. Could potentially tighten the stop up a little bit, but I'm probably not going to do that if I'm already in it. So, hope that helps, DJ. From Rich, do you think tomorrow will be a big buying opportunity for swing longs? It looks like a lot of things have a big hammer bar. If Snap didn't say anything, we probably have had follow-up. Yeah, Rich, I mean, that's exactly what I'm trying to figure out myself, right? So, I agree with you. I'm happy with how the market got bought up into the afternoon. I agree with you that if it wasn't for the Snap situation, I think that same buying would have just happened today at higher prices for further continuation. But it didn't, right? The Snap situation occurred. My only issue with your thought process or with what you're saying is I wish the volume was bigger today. I want bigger volume on a lot of the hammers that you're referring to. Even this pins, which does have massive volume, this needed to give me a little bit more of a bottoming tail here. It needed to close a little bit better than it did. Facebook's okay, I guess. I'm swinging some Facebook. And by the way, as difficult as it was on the pullback here, we actually called out a lot of lows perfectly today, which once again is awesome. We called out this. I can't believe this low held in Facebook, honestly, because the rest of the market continued to make new lows. We called out that you could be long off this low in Facebook. I called out this WeWork inside 5 and up. Again, this was one I was really looking at very closely, starting from early on. That turned out to be the low there. I wouldn't be surprised if this thing gravitates right back to $7 because it seems like that's what it does so consistently. So we did call out some really good lows there today, but I don't know. I wish I had a bigger tail and more volume. If I had a bigger tail and more volume, I would have more conviction with what you're talking about, Rich. So I'm looking at something that's still a mixed bag, and I don't have conviction. I like the tail in the IWM. I like that the IWM closed above 175. I like the tail in the SPYs. I like that the SPYs closed almost right back at the 80 EMA on the daily chart again, that they closed well. But I want bigger volume in these. The Q's candle is not as great. I don't know why I just changed that because it's not a real print. There it is. The Q's candle is not as great. Some of these other stocks are not as great. What does Google look like? You gotta like that Google candle. You gotta like that Google candle. Honestly, it's new lows for the year, but that's bigger volume. It's extended. That hammer's there. I don't hate this Amazon either. I wish it was at higher volume, but I like that it broke. Why does that happen? I like that it broke this low and snapped back up. What did Trade Desk do? Held this 40 low. Interesting. Huge volume there. Honestly, of all of them, Google's the one that looks best to me off of today's candle. I just don't. I'm repeating myself now. I want the volume to be bigger. I want the tail to be bigger on some of these daily candles. For Mike, what are your thoughts on VAR models leading to selling like today, having to be forced out regardless of not wanting to? Yeah, for sure. I mean, that's a really big thing. All the systematic strategies that are in the marketplace easily could just have been systematic selling that was forced to come in based on models, right? We look at, one of the reasons why I want to see the VIX come down is because that would lead to some buying from the systematic vol-based strategies that are out there. But the VIX is, continuing to, I think we got up to 31 again today, so that really hasn't been happening. But we know that like those strategies are fairly on the sidelines right now, right? Like I know Pat has posted statistics in his note. I don't remember them off the top of my head, but a lot of those systematic volatility strategies are utilizing a lot less capital in the market than I think that they do typically, which could be a bullish situation, but you need something to turn them back on. We haven't had anything confirm that they should be turning themselves back on. So that's part of the reason why I had high hopes coming into today. I liked that rest-ish type day we had yesterday into the moving average, into the ADMA before that news hit. Great question, Mike. Hope that helps. Robert saying in the EU, I really do not even know anyone who is using Snap, not even my 17-year-old cousin. Yeah, I believe it. They still have 3 million users or whatever. 300 million. Aaron saying he'll buy it at 5. I have bought Snap at 5. I think back in this area, I caught a trade in Snap from 5 to I don't remember where I got out. 8 maybe to this gap up. Thought I was a genius. And it went to 85. These charts are so crazy now when you look at where they came from, where they went to. Oh, excuse me. Still fighting this cold. Where they came from, where they went to, and where they are now. We've hit the point. I know a lot of people keep talking about it. I saw a chart about it this morning about, someone was like, the S&P is going to continue to work its way down to these 2019 levels until you get more clarity from the Fed. I just think that we're already at the 2019 levels. I just don't think you see it in the S&P and the Qs. You see it in the IWM. You see it in most stocks that you just type up. Like, close your eyes and type in a symbol. Most likely it's back to where it was in 2019. So that's kind of been one of my more bullish arguments, and that 170 is still a huge level here for the market. We've seen some stabilization in front of it, which makes a lot of sense to me. But yeah, just seeing the rise and fall of, take your pick here, the Snap, all the way back to its levels it was trading at in 2019 when the world was just fine, right? And then of course here's your COVID low at 8, post-COVID high at 83, and now we're back here at $13. Sick. From Dalek here. How much extension from the ADMA do you want to see for the setup? Oh, okay, cool. And that might be an add-on onto DJ's question. How much extension do I want to see? So what I want to see is extension relative to my stop loss versus my entry, right? So that's what I really want to see. So basically, is the space where I'm entering versus the space to my stop loss at least 1-to-1 with the space where I'm entering versus the ADMA on the time frame that I'm trading. I need it to be at least 1-to-1, because when you get an extension hammer that's confirmed by volume, you've got a bit better than a 50% probability of success, from my understanding, of seeing a price correction back to at least the ADMA. So, if I have a probability of success that's greater than 50%, all I need is a risk reward of at least 1-to-1 to be able to make money. So I want it to be at least my entry price to the tail low, which is going to be my stop loss, at least 1-to-1 from my entry price to where the ADMA is. More is better, but it's got to be at least 1-to-1. And you have to have the volume confirmation also. From Robert, Tesla margin call around 570 still in place or not anymore? I don't know, so I'm assuming you mean the Elon Musk margin call. I think it's lower now because I think he got more funding from somewhere else, and because he's probably not going to buy Twitter because we all knew here that he was going to flake out from the beginning, and he's just been looking for his reasons. So I don't know if he actually has that cash on hand because he already borrowed against the stock or not, but I think he was able to secure more cash from other investors, so he didn't have to borrow against the stock as much. Yeah, I think it's lower also. I think it's in the 300s because I think he got to borrow from the additional funding from somewhere else. I think it's in the 300s where he would get margin called, which I know Stefan, who's kind of away here for the beginning of the week, his price target on his Tesla short's $300. So could be there. A lot of these stocks have seen massive multiple contraction, but there are a lot of them that are still trading at pretty lofty multiples. Tesla's one of them. GameStop, even at 90, is one of them. There's still some areas of froth you can point to with this market, and that's why Snap was so bad here. Because even though there's some areas where you can look at these stocks and still say that the pricing is ridiculous on them, I personally would make the argument that the multiple contraction without a recession is done. If we have a multiple contraction, the multiple contraction that we've had, if we don't go into a recession, I think that we're cheap here. If we go into a recession, then earnings are going to come down further, and that multiple can come down further, and then you get into the case of, like that guy Mike Wilson and some of these other bank analysts that are calling for, $3,400, which is basically SPY 340, which we're not that far away from, especially if you want to consider we were just at 380 like 2 days ago. We're really not that far away from 340, but that's what they've been calling for in the recession case. So yeah, so and that's why Snap. I was losing my train of thought. That's why Snap was so important today, because Snap was potential further evidence of recession, right? Because there are two major parts. If ad sales are slowing down, it's such a big part of the economy overall, because that's related to spending. It's related to spending from the people who do advertising, and then it's also related to the consumer. So that points further to the potential of recession. But also, I think that hiring freeze information scared things a little bit too, because we're seeing Uber do it also. The flip side is that if Snap and Uber start a hiring freeze, and a lot of these other growth stocks massively overhired. I was reading some stats on Coinbase and the hiring that they've done. Like, Coinbase is just massively overhired. I've read a bullish case for the market if the job openings can come down below 10 million. So like right now, and this is just off the top of my head, these are not exact numbers, we have about 6 million people seeking jobs for about 12 million jobs that are outstanding. If that number can come down below 10 million, it potentially reduces some of the inflationary effects of a wage growth spiral that people are afraid of, which, by the way, one of the Fed members today came out and said that he's not worried about a wage growth spiral, but the market clearly is. So, from Dave Norby's wifey, is there a Rev Head and Shoulders forming on the 15? I don't know what you mean by Rev. Head and Shoulder, reverse or inverse. Got you. Head and Shoulders forming on the 15-minute charts of the SPY, Microsoft, and Apple. We can take a look. I would start by saying before I look, and I'm happy to take a look, I don't really care for the Head and Shoulders pattern too much on small time frames. I think a Head and Shoulders pattern is really more of a daily chart pattern, and it's a really important daily chart pattern. And we actually, saw it at highs here in the SPYs, and it's now more than fulfilled itself. Yeah, we can take a look at the 15. See, we're talking about like this. So then our neckline is somewhere between 396 and 398. So yeah, I see it a little bit. So what are you trying to use? SPYs, Microsoft here also. 261. Apple, also 143. Yeah, I kind of see it if they're able to break up. You know, first of all, whenever you're looking at a head and shoulders pattern or any pattern, it's only a potential pattern until it actually triggers. I've seen a lot of potential head and shoulders over the years that never actually triggered. But when they do trigger, they can be a very powerful pattern. And I see here, feeling bullish is looking for head and shoulders like it's going out of style. Yeah, for me, it's really a big daily chart pattern. I think it's a very powerful daily chart pattern when it triggers. My problem with it on the small time frames is I've always felt that it takes too long to build out. And that reduces kind of the efficacy of it. Like, you're never really going to see like a 5-minute head and shoulders pattern, I feel like, on an intraday chart that you're going to want to execute for follow through. Maybe if you're looking at a 15 or an hourly over the course of a week, kind of like we're doing right now, it might make a little bit more sense. With the head and shoulders that we had, a lot of major market tops have been marked by head and shoulders, and this one was really no different here. So very powerful daily chart pattern. But yeah, so I guess pay attention to those upside levels though that we just discussed on the smaller time frames. SPYs can get above 396 to 398, if Apple can get above 143, and if Microsoft can get above 261, they'll all start looking a lot better. Alright, gang, I'm going to wrap it up. Really tough day today. It was a really tough day. I know some of you guys got hurt in your swings. I got hurt on my swings, so I was there with you, and it didn't help. Didn't help me to be able to execute today. And then the way we sold off, like this didn't give you any opportunity to be able to short. Which is funny because, and I know I just said I was ending the meeting, but I came into today, we discussed these two options on higher or lower on what the market could do, and I said to myself, you know, I did a really bad job doing any intraday short execution on this type of day. So I said to myself, if we get one of those orderly sell-off days because the market's so scared about snap, I'm not going to repeat my mistake. I'm going to hit that bid. I'm going to short off of these pivots. And there was no execution available to be able to do that. Pat did have a great call out on the SPYs to the short side at around 950 today if they break lows. So that was a really good one. I don't know what the right word I'm looking for. My issue with it was the relative strength I thought the SPYs were showing versus the Qs and the IWM. But that worked great if you caught it. Otherwise, I saw no way to really be able to capture this to the downside today from an execution perspective on that momentum move. It was just ruthlessly brutal. So it is what it is. Have a great night, everybody. I'll see you all tomorrow.